Well, as promised, Bajaj Corp is the stock on our radar. It posted a mixed set of numbers this quarter, Q3. That is, the volumes have expanded, but margins appear to have declined for the company this quarter. Employee costs have also increased significantly. Sumit Malhotra, the MD of Bajaj Corp, joins us now to talk about that. Sumit, hi. Good morning, and thanks so much for joining us. I was going through your margins, and this time around, there is a bit of a, knockdown that we've seen. What are you facing in terms of operational pressures? Is there a lot of competition? Have you seen costs go up? Employee costs, of course, have risen. But what else? And what is the next couple of quarters looking like?
Good morning, and nice talking to you again. I'll start by disagreeing with you that there's a issue on margins. If you look at the margins and you look at EBITDA, it's at 32%. This is actually the same as the EBITDA last year, same quarter. You see, I think when you look at the figures, you have to analyze it a little more carefully, because last year we had booked 2 quarters worth of GST refund, because that was the first time that the government had actually highlighted how GST would be refunded to companies that were there in the northwestern and northeastern region. And that's why this is a kind of a issue with reading the numbers rather than profit really coming down. If you look at the line items, you will see that the consumption has gone up by just around 0.5 percentage points, and that's largely because of the way the crude reacted during that the last quarter. And even despite the high rise in crude, we were able to maintain the margins, largely because we had stocked up before the crude really started rising. The second point that you made, and which is right, the employee cost going up. But if you read into those numbers, you realize that we announced the ESOPs in the second quarter, and actually as per accountancy principles, you have to account for that in salary and wages, and that's around 1.77 crores totally added to employee costs just because of ESOPs, which have yet not been vested. It will be the first tranche will be vested in August of 2019. So I think it's more to do with reading the numbers rather than the numbers themselves.
One of the best parts of your numbers, Mr. Malhotra, is volume. A volume growth of 7% over a base of 5.2% is helpful, definitely. Sustainable, improvable?
Improvable. And if you again read into these numbers, and I would request investors to look at our investor presentation, because I pride myself in being able to give a very complete kind of an investor presentation.
Sure.
You will realize that 7% volume on 5% volume growth last year is only part of the good news. The bigger news is our largest brand has actually grown by 9.4% by volume in terms of our turnover, and around 15% by offtake volumes, which are very good numbers, and that really gives the hope that this volume growth will continue into the next few quarters. What is even more exciting is that volumes have grown by 7%, but turnover has grown by around 12.5%, which among the last 6 quarters is the highest growth in any quarter.
So this relaunch of the Almond Drops hair oil that you recently did with a fresh new campaign, new bottling, etc. What was the response to that? And will you be looking to do any more, such exercises in branding? And what could the sort of the quantum of expense be to that effect?
The relaunch of Bajaj Almond Drops has been very well received. And please believe this is only a part of the whole strategy behind making Bajaj Almond Drops more modern and more for the youngsters rather than for the oldies. And I think it's been very encouraging, the response to the pack and also the advertising campaign. We have other launches coming up. Around 5 quarters ago, I had said that we are targeting 1 launch every quarter. This quarter you haven't yet seen the launch. but the next quarter you should see 2 launches that will sort of move in the strategic direction of reducing the dependence on our Bajaj, the main brand, which is Bajaj Almond Drops hair oil. In terms of expenditure, yes, there will be expenditure, but fortunately the margins are not under strain, and therefore we could actually divert the extra margins we make into advertising and sales promotion for the new launches. So I don't see any major drop in EBITDA margins, but advertising and sales promotion could go up in the coming quarters.
Okay. Any more acquisitions? Nomax was the last.
Yeah, it was the last, and we have been very careful in looking at the acquisition targets. There are quite a few acquisition targets in the market today, but each comes with a degree of caution, and therefore we would rather be doing a proper due diligence rather than jumping into any acquisition. I obviously can't talk about the acquisitions that are on the plate, but God willing, you could see some of them in the future. Yeah.
Okay, some of them in this financial year, in this calendar year?
You don't know really, because till the time you actually sign on the dotted line, quite a few things can go wrong. Last year we had a case in which we were about to sign off, and there was a disagreement and we backed off, or the promoters of the selling company backed off. So I wouldn't like to say that it will happen in this financial year or this calendar year, but since it's a very important part of our strategy, we are looking at sort of doing this actively.
Fair point, sir. We will look forward to any announcement with some interest. Have a great 2019. Thank you very much for joining us.
I'll come back to you with it.
Certainly.
Yeah.
Okay, that's
Thank you.
Bajaj Corp. By the way, just a point on the market, SBI and ICICI Bank, they're trying to bat for the bulls once again. Weekly options expiry day, so the index is off the lowest point of the day, though still there's a bit of a problem, but SBI is now in the green. I think ICICI Bank still in the red, but from the low point it's seeing a bit of a recovery. The problem today has been the IndusInd Bank, and even Axis Bank is a bit soft right now, down about 1.2%. But Ashwini Gujral, Mitesh Thakkar and Rajat Bose now with us for fresh trades. Ashwini, sorry, I missed the opening trade that you took. If you could revise that, and what's the call now?
See, at the open we went short on Bank Nifty. Still the Bank Nifty has not been able to recover into the green. So somewhere, some sort of weakness is creeping in. Even now it's a decent trade. See, everybody is in the Bank Nifty. So any sort of shake-up that happens there, it can have fairly strong declines. And my issue is with the macros, not really a micro issue. So my sense is that you could have a further downside once this initial attempt to recover is over. As far as individual stocks are concerned, BPCL is a sell with a stop of 336, target of 322. IndusInd Bank is a sell with a stop of 1590, target of 1540. And RCF is a buy with a stop of 65, target of 71.
Fair point. Good morning, Mitesh again. What are your trades?
Yeah, good morning, Lata. I have in fact 2 buy calls. REC, I think after a few days of consolidation, could see some kind of an upward breakout. So that's on the buy list. Keep a stop at 120, look for 127 kind of a target. And I had a buy on UPL as well, but it's already moved up in the last few minutes. But if you get it around 765, 766, good entry point. Percent lower from here, and try to keep a stop at 755 and look for targets close to about 788 to begin with. Though I suspect once 788, 790 goes, I think the stock can head towards 825 as well.
Okay, yes, UPL is one of the big movers today. Actually, ex of the banks, a lot of the large caps are moving pretty well. So whether it's L&T, HUL, Infosys, ITC, all up in the green right now. TCS as well. Rajat Bose is also with us. Rajat, hi, good morning. What are the stocks on your list this morning?
Good morning. I have 2 buy calls and 1 sell call. Sell call is on an index. But first the stock buy calls. Divi's Lab January futures. Stop loss 1490 and the targets would be 1550 and 1565. This is showing traction and sort of a mild breakout is there. And Raymond January futures, I would put a stop loss below 804, 822 and 827 are the two targets. And finally Bank Nifty. Bank Nifty I would like to sell. 27805 would be my stop loss and 27525 and 27470 are the two targets for Bank Nifty. In fact, what I would like to say here is this, that Bank Nifty can actually fall much further. There is a particular pattern that is unfolding that suggests that Bank Nifty actually could spoil this upswing, and the sentiment in the Nifty would also be affected in the coming days. There is that possibility. Of course, if 28,000 levels are violated and it scales up towards 28,400, then this pattern would be negated.
Okay, by the way, just want to point out, Muthoot Finance has been in a league of its own ever since its last quarter's numbers, and once again, I think today this marks a fresh 52-week high on the stock. And just pull out, Muthoot Finance, that's of course today's chart. It's up almost 2% right
chart
now.
Maybe.
And 1 year chart or 6 month chart, you will see the kind of move that you have seen. So there's been, of course, one part of NBFC move, but this one really has been, especially since last quarter's numbers, just one-way buying on the stock.
You know, the gold finance companies never went through the kind of problems that the other NBFCs went, and maybe that realization also is helping Muthoot Finance. But I'm actually more intrigued now by IndusInd's performance, or lack of it actually. You know, that 1570 is turning out to be quite a bit of a problem for that area, for the stock. Mitesh, is there any call on IndusInd?
See, it's been, very clear defined range, 1550 to about 1605. In fact, yesterday I thought it would break on the upside, but once it starts getting on either side of the range, I think we'll get a 50-60 point kind of a meet.
Okay, sorry, I think there is some ambulance or fire engine in the background. We couldn't hear you well. Gentlemen, thank you very much for joining us with your 10 a.m. trades. We will touch base with you later on in the day.
Okay, well, let's do one thing. Let's get a quick handle on what's happening in the commodity space. Of course, the big talking point is that huge surge that we saw in crude over the past few days. Manisha Gupta is here to give us a roundup of all of that. Hi, Manisha. Good morning. A little bit of cool off is what we saw this morning.
Well, yes, nearly a percentage point down, but this is coming after nearly 5% gains overnight. And, in the last week of December, we were clocking nearly 40% off from the 2018 highs in case of the crude oil prices. From those lows on Christmas Eve, we are nearly 20% up now in case of the crude oil prices. So that's really how the 2 weeks have been in case of the crude oil prices. Clocking nearly $50 per barrel for the NYMEX, and 60 is what's holding for the Brent as well. Very strong gains is what we have seen here. The US and China talk optimism, of course, has been playing on in all asset classes. For crude oil prices, it also has been about the output cuts, where Saudi Arabia says that they will cut exports to 7.2 million barrels per day for the month of Jan and cut it further to 7.1 million for the month of Feb. So these are deeper cuts than what Saudi Arabia had actually put out in agreement to OPEC and allies. So we are looking at the deeper cuts coming in here. Apart from that, you also have Canada cutting output by 9% for 2019. There are those involuntary cuts coming in from some of those OPEC members as well. And of course, there are political and geopolitical tensions. All of that really has been the premium for the crude oil prices. What hasn't worked so well also, and the reason for the profit taking, has been the mixed US weekly inventory data that came in yesterday. While there is a decline in the US inventories, there is a huge buildup by anywhere between 8 to 9 million barrels in case of petrol and distillate inventories. And that, of course, led to some of a decline coming in on your screens right now. The gold and silver prices, in the meanwhile, continue to trade firm, whether it is about the weakness in US dollar, the Brexit concerns, or even if it is about the partial shutdown in the US government that just about continues for a third straight week. That clearly has been supportive for that one. 32,000 is what we are holding in case of gold MCX, and silver has passed 40,000 rupees per kg in the spot markets there. So it is actually a multi-month highs that we have seen continue in case of the precious metal prices. Positive this sector as well in 2019 until time. it has been good going for many of those base metal prices as well, with the US and China talk optimism and the kind of cues that we heard from US. Beijing out a release in sense of announcement of what really came out from those talks is still awaited. But we did see good gains in the markets yesterday, even if that was a knee-jerk reaction. So some consolidation is what you can expect right now as the initial optimism rally fades and markets actually look out for actual concrete content from there. So very flat trades, as you can see. It's not even 0.1%. It's very flat moves is what we are seeing in the base metal prices. This is exactly what you are seeing on Shanghai, LME, and this is exactly what the New York session as well did yesterday. So some bit of gains and otherwise flat market is how metals are turning out to be. Trading strategies, and we have then from Angel Commodities. They have a buy call continuing in case of the silver prices. 40,000 exact is what they're watching out for on the futures there. There also is a call in the metal space coming in for them. Nickel is what they're expecting to see gains in. 810 is the target they're watching out for.
Okay, ma'am, I can see the spring in your step. 20% higher crude since Christmas week and 5% this week. Then why are you in red, Manisha?
That tells you the market is still in the green. So, yeah.
Okay. Thanks a lot. Thanks a lot for joining us. We'll touch base with you oftener today because it looks like commodities are in a very interesting spot. We haven't seen 32,000 on gold in a long time. So a lot of green in precious metals as well.